Welcome to Business Lunch. I'm Pavitra Parekh. Those are the headlines that we're looking at this afternoon. And it is a slow day of trade. We've been range bound pretty much at these levels. So it's 18,335 on the Nifty right now. Seems like the market is already a bit in the holiday mood, if not in the Christmas spirit at least. For now, it is, like I was telling you, around a 60-point gain that we are seeing on the Nifty. The mid-cap index has moved higher, at least from the day's low. We were seeing significant cuts come through at the start of the session, but we are now at least around 20-odd points in the green for the mid-cap index. What is holding up well today is the entire consumption pack. A few of those stocks should come up for you. That entire sector looking quite all right. And on the downside, of course, it is really IT on the back of what came through from Accenture's earnings and their guidance. So the entire IT pack under pressure. In fact, for the month, it's now down around 6.5–7%. So do keep those on your radar. The PSU banks, which are, really been moving fast, seem to have taken a little bit of a breather. So all of these stocks are seeing some cuts. And remember, from now up until the end of the year, we're not really going to get any major cues in terms of data. So it's largely going to be what we get in terms of, the crude prices as well as the rest of the global markets which are trading. So that is what's happening on the market front. We will come back to this. But first up, let's talk about some key stocks which are in focus today on the back of Accenture's revenue growth. Remember, this came in better than the guidance, but the fact that the company has maintained lower growth projections despite a strong first quarter, this is what really has the street worried. So Rima is here with the details. Rima?
Thanks so much for that. So Accenture's stock price itself was down 6% post numbers. On Thursday and Friday combined, the Accenture share price had declined by close to about 10%. A quick word on the numbers. Q1 revenue strong, revenue growth of 15% ahead of the company's own guidance. But despite a strong Q1, the company maintained its full year revenue guidance of 8 to 11%, which basically means that things will slow down in the second half of the year, because in Q1, they've done close to about a 15% growth. The management commentary also indicates that the clients are now turning caution. So they are saying that the focus of deal wins, the new deal wins, is more towards cost optimization. They've seen some slowdown in the smaller size deals. Morgan Stanley says that they see limited triggers for re-rating of the Indian IT companies in the near term. Citi says the management comments on IT budgets in the Q3 earnings call will be a key point of focus. They're cautious on the entire sector. Infosys is the only buy stock in the entire IT pack for them. Nifty IT continues to remain under pressure. It's down nearly 5.5–6% so far in December, and for the year so far, it's lost 26%. Back to you.
All right, Rima, thanks a lot for taking us through all of those highlights as well as what this really means for Indian IT companies. But the next stock that we're looking at is UTI AMC. It is buzzing in trade after reports suggest that the Tata Group is in talks to buy majority stake in the company. So Surbhi is here to tell us more about that. Surbhi?
Hi, thanks for that. So UTI AMC has been surging in trade today, and that is because the report suggests that Tata Group is in final talks to buy a majority stake in UTI AMC from 4 state-owned financial entities. PNB, LIC, SBI and Bank of Baroda together own close to 45% stake in the company. The reports also suggest that the final agreement is being sought on deal valuation and internal approvals have been secured. Tata has also received in-principle nod from T. Rowe Price Group, which owns close to 23% stake in the company. If this deal goes through, the combined firm will be the 4th largest AMC in India. These reports have not been independently verified by CNBC-TV18.
Okay, it is a near 13% gain that we are seeing on UTI AMC on the back of that news. Surbhi, thanks a lot for getting us all of the details. The other space that is, in focus today, because it is seeing some cuts come through with the number of stocks, is the pharma space. So Ekta is here to round up all of that action coming through on those stocks. Ekta.
Thanks for that. Well, I'll start with Sun Pharma, which is in focus because they did notify to the exchanges that they have received the US FDA warning letter for their Halol facility, which basically summarizes the violations or the CGMP violations, which is current good manufacturing practices. Now, this is in line with the import alert news for the Halol facility, which was received on the 8th of December, and hence the stock had already reacted to that piece of news. The warning letter is a part of it. Now, the import alert basically implies all future shipments of products manufactured at the facility are subject to refusal of admission in the US. This is until the facility itself becomes compliant with GMP standards. The US FDA, remember, has excluded 14 products from the import alert subject to certain conditions. Supplies from the Halol facility to the US was around 3% of consolidated sales. It would be less in terms of a financial impact if you include those 14 products. Now, Alembic, US FDA has issued 5 observations in the Form 483 to their Jarod plant. The company says the observations are procedural in nature. Dr. Reddy's is in focus because they've completed a phase 1 study of a particular biosimilar tocilizumab, which is basically used for arthritis. The company has said that the phase 1 indicates that there is similarity in the EU as well as the US reference products for this particular biosimilar, and they will be conducting global phase 3 trials. Shilpa Medicare, they have launched a cancer drug in India. It is expected to have a higher dosage, which is going to be beneficial for patients, as the dosage for each patient is around 3,500 to 4,000 mg per day. They've launched it around 1,000 mg for one dose, and it is also, it's a novel technology which basically allows for faster dispersion, which is in 90 seconds, which should also aid patients. So that stock is in focus on account of that.
All right, Ekta, thanks a lot for taking us through all of that action from the pharma space. But with that, let's also move on and talk about JSW Infrastructure, which is among the top 5 port companies, remember, in the country. Now, this company has filed its DRHP for the IPO. So Yash is here to run us through the details. Yash?
Well, so Pavitra, JSW Infra is a significant player when it comes to the Indian port sector. What we've been given to understand is that JSW Infra has appointed JM Financial as the lead banker for its IPO. The company is in the process of appointing more investment bankers to take this IPO process forward. According to our sources, the timeline which is significant here, JSW Infra is looking to file the IPO DRHP by February of 2023 and then eventually launch its IPO by May 2023. The amount which the company looks to raise is also quite significant. According to our sources, JSW Infra is looking to raise about 3,000 crore through this IPO, which would entail an equity issuance of about 10%. Roughly, that would value the company at about 30,000 crore rupees. As far as the IPO is concerned, it's entirely fresh issue, which means the amount of 3,000 crore rupees, which the company is approximately looking to raise, comes into the company for its expansion. CNBC-TV18 has written to the company on this particular development. We are still waiting for a response on this one.
All right, Yash, thanks a lot for getting us all of the details. JSW over there, Infra, looking to launch its IPO sometime in the coming few months. But staying with the primary markets, investor solutions provider KFin Technologies' IPO has also opened for subscription today. In fact, we spoke with the management earlier to really understand what their business model is like and where they see the outlook for the company in the next 5 to 10 years. Listen in.
We have seen market share gains from about 26% to 35% in the case of equity. Okay. We have seen a SIP market share increasing close to 42%. So we've been range bound, 40 to 45% in the past, right? And we'd like to believe that anything beyond that, if we could accomplish, we would love to plow back in terms of additional, modes for creation for the future. International for the period ending September was about 13%, right? And we have made certain acquisitions, not just managing the investor solutions, but also for fund accounting and administration, which also has international presence. We'd like to believe that, over time, we will be present not just in Southeast Asia, but, hopefully in the US and European markets as well. And we want to orchestrate a revenue pool of probably about 20% in the near term in terms of the overall pool, even as it expands.
Okay, that is the word from the KFin Tech management. But with that, we have to get into a short break on the show now. You don't go anywhere. There's lots more news and updates coming up for you in just a bit. Back, you're still tuned into Business Lunch, and some important flashes at the bottom of your screen. The FIFA World Cup, this is on the viewership data that came through. Jio Cinemas released the viewership data that we got for the FIFA World Cup final, which was yesterday. And we have information that 32 million people tuned into Jio Cinema to watch the finals yesterday. So that is a huge number. In fact, the digital viewership has overtaken the TV viewership as well for the first time. We are going to have Mangalam in just a bit to, fill us in with some more details. This has become the most watched global sports event on digital with respect to, of course, India's participation. But these are some big numbers coming through. Most watched sports event, like I said, from the sports world. That is the FIFA 2020 World Cup final, where 32 million people actually tuned in to watch this. And with this, you're now seeing that the contribution from digital is actually higher than what we saw in terms of TV viewership as well. So Mangalam is here with some more. Mangalam, that is a huge number.
That is indeed a huge number. In fact, I was on the go myself, so I had to watch it on my phone. And while I was on the go, I had a lot of people around me. They were all watching on their phones as well. And that tells you the numbers. For the finals itself, yes, 32 million people did tune into the app for watching, Messi versus Mbappe, the Argentina-France final. But importantly, there are a bunch of trends that really stood out. The first one is that digital viewership has for the first time overtaken TV viewership for an event like FIFA World Cup. For FIFA itself, it's the first time Indians have tuned into such large numbers, 32 million Indians watching, and over 110 million viewers consume the content on digital throughout the World Cup. What does that mean? It is the largest viewership market for an event where India isn't participating. So that was the other positive that really stood out. And what does that mean for advertisers? Because at the end of the day, we're all talking business, right? 50 brands across e-commerce, banking, financial services, auto, fashion, hospitality, fintech, all of them advertised on these platforms. So yes, while the World Cup was a big hit for viewers, and the matches did not disappoint as well, up until the last second, so to say. All of them were thrilling, and all of them actually tuned in up until the last second on their personal devices. And the other interesting trend was, you know, at public places, while everyone was consuming the content on their personal devices, the collection was, you know, communal, or rather community-based. So if there was a goal that was scored, everyone watching on their phones would shout simultaneously. So that was, you know, an interesting insight into what content viewership going forward, especially for sports, etc., would be. And 3.2 crore Indians watching FIFA, who would have thought?
That's insane, right? I mean, this is not even cricket. We're talking about football here. So that's huge numbers coming in. And like Mangalam was just saying, you know, throws up some really important trends in this space, with digital actually overtaking even TV viewership. So that's what we're tracking as far as the geo viewership numbers go. But with that, let's actually... Okay, let's bring you more from the World Cup. This was one for the ages, like we've been talking about. Messi's Argentina edged France to lift the World Cup on a penalty shootout earlier. And then, of course, Argentina had taken a 2-0 lead from France. But then we saw Mbappe come back and, you know, take it to complete it at 2-2 at extra time. Argentina again took the lead in extra time through Messi, only for Mbappe to complete his hat-trick and then equalize yet again. Argentina then won after goalkeepers Martinez's heroics in the penalty shootout. For those of you who missed out, here are all of the highlights. All right, so those are some interesting visuals. In fact, our colleague Shibani Garath was in Doha for the final, and she got in a mood check on what the Argentina fans had to say after the final. You have to take a look at this.
What a night, what a match, as penalty shootout decides the winner of the FIFA Football World Cup 2022. Behind me are Argentinian fans. I know their excitement will meet and reach new levels. How do you feel about Argentina winning the FIFA World Cup 2022?
Great, was great. We win and we are very happy.
Okay, taking home the trophy after 36 years,
yes.
How does that feel?
It's amazing, and it's amazing because I am with my son. It's very, very beautiful, really unforgettable.
And then Messi took home the golden boot. What was that like for you?
Messi is the best player in football history, and no words can describe him.
And phenomenal support for the Argentinian team in the stadium. Do you think they fed off the energy and played so well because of that?
Okay. Yes, of course. Yes. We are very, very excited.
And everyone singing the anthem.
Okay,
Can you
come on.
again?
Dale campeón, dale campeón, dale campeón, dale campeón, dale campeón, dale campeón.
That is the kind of excitement level at the Lusail Stadium. It's phenomenal, the kind of energy and support that Argentinian fans had for their team inside, and they definitely fed off that energy and took home the World Cup.
Shivani, thanks for that. This was definitely the most electric mood that we've seen, and truly a finals-worthy World Cup match. But with that, we have to get into a short break now. There's lots more news and updates. Still tuned into Business Lunch, and let's now talk about the imposition of GST on gaming activities. This has been, you know, an important issue that is being discussed. This, even as a group of ministers submit divergent views on taxation, sources are telling us that the government's view on the matter is absolutely clear, that there can be no distinction between gambling and lottery activities. Timsi is joining us to tell us more about this. Timsi, there was an important meet on Saturday.
Well, as you rightly said, the GST Council met on Saturday. However, it did not take in consideration the group of ministers' report which was submitted just a few days back to the Union Finance Minister by the convener, that was Chief Minister of Meghalaya, Conrad Sangma, submitting that report to Nirmala Sitharaman with divergent views. He was very clear when he spoke to us after submitting the report that there has been no consensus on either the taxation quantum or the valuation mechanism for all the three activities, that is casinos, racecourses and online gaming. But on Saturday, when I spoke to CBIC Chairman Vivek Jory on the Gamescraft matter, where the government authorities have challenged Gamescraft for alleged tax evasion of about 24,000 crore rupees, he said on online gaming, the department's view is very clear that 28% GST is payable on actionable claims arising out of betting or gambling in the Gamescraft and any other online gaming cases. Also, GST has to be paid on the full winning value and not net of margins. The activity is considered as gambling, and that is why we treat it as under 28%. Meanwhile, as I said, Gamescraft matter is a little old, already under litigation. There are many other such cases which are under litigation. But given that there are divergent views by the GOM, we were thinking that once the GOM gives clarity, that will be adopted by the GST Council. As divergent views continue, when we checked with sources as to how government is looking at treating this in future, because if such divergent views continue, then how well can there be a possible solution? Well, sources said that even as GOM on online gaming and casinos and race courses had submitted divergent views, government view is very clear. And the view that sources said that CBIC holds as of now, till the time there is no clarity from the GST Council, it is that cannot make any distinction between gambling and lottery activities. Casinos, race courses and online gaming have a common thread of gambling, which for GST purposes is part of lottery. Remember, lottery already is covered under GST and is treated under GST at 28% on full winning margins. And thus, government's view is that we need to give fair and equal treatment to all related activities which are related to lottery, which is gambling. And that is where online gaming, casinos and race courses come in. So let's see whether this particular view is tenable in front of GST Council or not when they meet next and consider the GOM's report.
All right, Timsi, and we trust you to bring us that information. Thanks a lot for taking us through, everything that went down at this meeting on Saturday on gaming. But with that, let's also bring you the news coming in around Twitter. If you've been on Twitter, I'm sure you've seen it. CEO Elon Musk has come up with a poll asking Twitter users whether he should step down as head of the company. In fact, he said that he would abide by the poll results even if the poll goes against him. As per the polls, which are still underway, 57% of users want the Twitter chief to step down, while 43% want him to remain the microblogging site CEO. So the polls come after a policy update which prohibited accounts created solely for the purpose of promoting other social media firms and content that has links or usernames for rival platforms. So that's what's going on with Twitter. And, there's some fresh news every day, but this is what we're tracking today. Let's see how the poll goes. But with that, we're going to wind down on this edition of Business Lunch. The market hasn't moved much at all this past hour. It's around 80 points higher on the Nifty, like we've been pointing out. The mid-cap index seeing a 0.2% gain. So pretty steady, but pretty range-bound. On that note, we're going to wind down. Thanks a lot for tuning in. We have Mid-Cap Radar, which comes up next. And also hear out some opinion from Ajay Srivastava on how the market could move from here.
I think for most people who do on a salary side, the best thing is your PF. PF gives you the best returns compared to all the debt mutual funds. So I'm not suggesting debt mutual fund at all. I've been suggesting that you look at your PF, you look at your debentures that are available in the market, look at even government bonds. They give a better yield at this point in time. State government bonds, you can buy from the RBI window directly. You don't need a broker for that. So multiple options. Debt mutual fund, I would put the last or lazy options. If you're a lazy investor, you go there. So I would suggest to people is either stay away from buying, or if you really need to spend your money, do it the right way, spend it on holidays. Equity is not the place where you're going to be happy in the next year. Only long-term investment I find in this world, and including India, is commodities companies. Because there are few, and who are there are monopolies. So if you were to ask me in equities, only one long-term bet I can still go for, and I'll still keep investing, is the commodity companies, both India and abroad. If the recession in the West comes, the rest of the market will also go down along with it. So I'm saying if you need to invest in this market, and I would sincerely believe the commodities is still the place to be, then commodities has to stay firm or go up. Because yes, recession will put it down, but also what it does, recession, is that it will take away new explorations, new sites, new mines will not be explored any longer.